In other news, economic analysts say Singapore's key exports could see some volatility in the near term if the Middle East conflict drags on. Growth in non-oil domestic exports slowed to 4% on year last month, down from 9.2% in January, primarily driven by shipments of electronic products.
We are still seeing expanding new export orders, including for electronics products, and that still continues to see strength in areas like demand for Singapore's memory chips and server-related products. But if this Middle East conflict is prolonged, that would present one key area of downside risk for electronics exports and for the broader export growth numbers for Singapore in the coming months.
Analysts believe Singapore's electronics exports are likely to be supported by global AI-related tailwinds. That's even as non-electronics exports fell by 6.9% in February, extending January's 3.1% decline. A dip experts believe is due to higher base effects and elevated US tariffs. Still, bright spots remain in key foreign markets.
Non-oil domestic exports to China was quite strong at around 18% in year-on-year terms in January and February combined, and that's reflective of strong Chinese industrial activity. And we also see that there's still quite strong numbers to Northeast Asia, such as Korea and Taiwan, which are key upstream players in the AI and electronics supply chain.
And for more, I'm joined by Seng Wun, who is Economic Advisor to SDAX, a Singapore-based fintech company. Seng Wun, good of you to join us. Now, we see that export growth has slowed from 9.2% in January to 4% in February. So what are some of the reasons for this? Is it simply month-to-month volatility?
Well, it's still the sixth straight month of year-on-year growth, although it's the weakest in that sequence. For the February month, it's really just reflect the base effect in which we had that shift in the Chinese New Year from January to February this year. It's still a fairly decent numbers. We tend to look at it because of the shift in the Chinese New Year, the January to February figures, which at 7% is still very, very presentable.
Well, we're seeing especially strong gains that's concentrated in integrated circuits and also PCs. How sustainable do you think this electronics-driven growth really is?
Well, if we were not had to talk about the Middle East conflict, if we were to look at the figures from the January, February, from the PMI, Purchasing Manager Indices, and the new orders front, and what we are seeing in exports related to AI demand, I would be very positive. But clearly, the January, February figures reflected the numbers before the Middle East conflicts. So there's quite a bit of uncertainty as to the actual outcome in the export front in the coming month. Clearly, that depends on how long, how sustained the Middle East conflict will be, and to what extent that impact consumer and business confidence in the month to come.
Yeah, and meanwhile, the non-electronics exports, those declined, and it's dragged down by petrochemicals and non-monetary gold. What does this divergence then tell us about the broader external demand?
Well, non-monetary gold clearly reflects the demand in terms of safe haven assets. And for non-monetary gold, demand for the region still remains very resilient. Again, we will look at it for the 2-month figures, which is still quite robust. On the petrochemical front, that's a little bit more challenging because we do have excess capacity in the region. But clearly, that's for the January, February month before the Middle East conflict. Now we're talking about for petrochemical challenges with regard to raw material, the fossil fuel, and clearly the refining capacity for petrochemical downstream. So that will clearly demand on demand condition, and that comes back to the earlier issue of business and consumer confidence with regard to demand for petrochemical downstream product. But because of a sharp jump in the input cost, clearly much will depend in terms of margins and what are the prices that can be passed on to consumer. So it will be fairly volatile in terms of the petrochemical cluster with regard to output, input, and the price front.
Yeah. And despite this volatility, Singapore actually saw stronger export growth compared to markets like to South Korea, Taiwan, and Hong Kong. What does this then say about the regional supply chains and also semiconductor demand in Asia?
Yeah, clearly this comes back to the question of the resilience within the AI-related demand that has been very robust for the January-February month. Going forward, it still will be a case of to what extent we see investment flow, demand-related flow with either the building of data center with regard to demand for chip-related within the AI space itself. Lots of questions over that side. If we were to look at, again, the PMI numbers, it should be more supportive of production and output and exports. But there is clearly, for now, a lot of uncertainty around the actual part of the demand and for output and export numbers from Singapore side. But within the region, so far, it still remains fairly resilient, but that could be tested if we have a protracted conflict in the Middle East.
Yeah, Seng Wun, thank you so much for your insights. I've been chatting with economist Seng Wun at fintech company SDAX.